you guys should be seeing. Yeah, you are. All right, good afternoon, everyone. Today is Tuesday, October 9th, 2012. And I am just going to go through the results of the live trading room this morning. Okay, let me just start out with the results. Crude oil, we're plus 2 ticks. Gold, plus 9 ticks. The NQ, plus 4 ticks. We're flat on the YM. We're flat on the ES. Flat on the Russell. That's the other one. Flat on the 6E. Flat on soybeans. Let's see, what else did we look at? I think that was all we looked at this morning. All right, but those are the results for the morning session. Crude 2, gold 9, NQ 4. Now, if you have not taken a free trial with us, go to www.cfrn.net/apply. Take the free trial. With the free trial, you get 5 days in our live trading room, and you get access to all of our indicators. In the email that you get when you sign up for our free trial, there's a video in there and there's a whole bunch of links. It's important that you read through the whole email that's sent to you, okay? Because there's a whole bunch of videos and a whole bunch of links that show you how to download the platform, that show you how to install the indicators and take care of all that kind of stuff. So you'll be able to get right to it as soon as the markets open up. All right. Now, let's start with the ES, okay? I did not actually take a trade on the ES. I placed a trade a couple times, but I didn't actually take a trade. From the open, right here, the ES was right inside a weekly trading zone, okay? Once it got down below the weekly trading zone and it pulled back up to the BBC right over here, we actually had a double bottom here preventing me from taking the trade, but the YM was also preventing me because at the time the YM was right above a weekly trading zone. So what I had wanted it to do was get significantly below the zone, and I figured that by the time it did that, the YM would move. They did move. They both moved together, as a matter of fact. And if you look down here, where on the DMT, where the green line pierced the red envelope, right here, the green line pierced the red envelope. We suggested then that we should see 41 to 40. The price was at 14.46 at that time. We suggested that we should see 14.41, 14.40, or we should see a 5 to 6 point move down. We obviously got more than that. Unfortunately, we didn't get a pullback entry, an opportunity to enter into this at that time. All right, something that we don't normally do, but I will bring it up here. Just for argument's sake, it was right around over here at 10, where we pierced the envelope was around 10.37, 10.38. So right in here, in this spot right in here, on the 4-tick range, there were momentum trades here. So you couldn't get in on the pullback over here, but you could get in on a momentum trade over here on the 4-tick range. Okay, there was an opportunity for that right in there. There's an opportunity again right here on the 4-tick range. You see this is the ES 4-tick range. We don't normally look at the ES 4-tick range all that often, but I just wanted to point out that there was a way to get into this big move down. Once it did move down, it pulled back up. As it was pulling back up over here, we were waiting for either a lower swing or a test of the BBC. While waiting for the test of the BBC, we got a higher low right here, so we said we were not going to trade a bounce off the BBC right here until we got a lower swing again. I did suggest I drew in this trend line before we closed under it, and I said if we close under the trend line, we should see price drop down to this level right here. And after we get a close below that level, like right over here, we then would look for another opportunity to short off the BBC. Again, we had a higher low put in there, so we had to draw another trend line and say we're going to wait until we get another lower swing. We got the other lower swing, but by this time we were at the end of the morning session. Okay, so there was an opportunity right in here during the break, right in there, to short the ES right there. That was the only spot this morning where we could have actually shorted it. There's an opportunity to get long on it right over here. You can see if you went long here at the BBC after the bullish cross, went long at the BBC, expecting it to get up here, which it already did. It closed the window of opportunity, which is the space between the BBC and the MA1. It's already done that. The BBC, by the way, is this green line, and the MA1 is this red and blue line. That was pretty much it. That was all the opportunity on the ES. not a whole bunch of it. I did have an order on for a little while, but I had to take it off because it was disqualified by my rules. Over here on the YM, again, I didn't take any trades over there. Same reason, pretty much. Things were getting disqualified. Oh, actually, I did take a trade. Sorry, I took a trade over here, and it closed on the other side. It closed on the other side of the MA1, and it pulled back down. I moved my stop to break even once it had closed up there, and came back down. It took me out at break even. That was right before this big move down. Now, when this big move down happened, you can see we're going right into the zone here on this pullback, so there was no opportunity there. And over here, I don't know what was going on here. We needed to get a lower swing over here. We finally got the lower swing right here, but this again, same thing as the ES right here. It was during the break. All right, so our only time to get into this after the big move down was right there during the break. There were a couple of long opportunities in here, but I believe while this was happening, the ES was right below its zone. So we weren't going to go long over here with the ES going right into a weekly trading zone. Okay. That was it on the YM. On the NQ, we did take at least one trade, I think. I think we only took one trade on the NQ. Here it is right over here. All right. The setup on the NQ is this. We had a bearish cross right here. It pulled back down. When it pulled down and pulled back up to the BBC, we were expecting it to bounce off the BBC, looking for an area of resistance. When it did that, we looked down here for some bearish divergence. We had it. At the down close right there is where we shorted. It actually went a little further down and went about 2 points down. We moved our stop to plus 1 point once we got well below the MA1 there. We were just trailing behind the MA1. And it came back up and stopped us out there. All right, there were a couple more opportunities in here. This one didn't go all that far. The spot to look for was right in here. You could have faded off the yellow brick road down to the BBC. And I went over this in the live trading room. From the BBC with the up close, if you had some bullish divergence, which would have been actually right over here. From the BBC with the up close, you could have anticipated it to move up some more. It wasn't pretty in here when there's just a little bit of room between these two. You know, I'd rather have there be, well, first of all, I'd rather have it be like this, where you're on the right side of the yellow brick road there. But if you're going to have them together like this and you're going to trade one to the other, I'd rather have there be more room in between. All right. But nevertheless, you can see there were a couple more opportunities in here. Not sure why I have this highlighted right here. Oh, I have this highlighted because we were analyzing today the break of the yellow brick road, or the break of the elbow, which is actually what it is. When trading the break of that, and one way to trade the break of it is wait for the close on the other side of it, and then wait for a bar to close beyond there. So right there would have been the spot to short on that down close. Right there would have been a spot to short. The pullback up right here with the bearish divergence, another spot. Over here we didn't have any divergence anymore, and that was pretty much it. Over here we had a bullish cross right there, tested the BBC with an up close, and that went up about 2 points with the bullish divergence down here on the bottom. All right, now all these 4-tick range charts are the same. Okay, you're looking for the same thing. Okay, across all these charts, and that was pretty much it. There was another one in here until you get into the break. Okay. There's another one right there. And over here we had some bearish divergence. This one didn't go anywhere, but again, this one was right in the break. So that was the NQ, the ES, the YM. Let me just show the 6E here. Oops. Okay. Well, we'll just go with that. The 6E. You know, we had a couple of partners this morning that were done in the first 20 minutes. They had reached their goal for the day. One was trading the YM and one was trading the 6E. The 6E on the breaks, it tends to move really well, and on the bounces off the yellow brick road, it tends to move really well. Okay. Again, the same application here. You hit your down close and then a close below it. Right there. You know, after the break, you get a close in the direction of the break is pretty much what you're looking for. Okay. Like over here, it would have been right in there. In here, right there. test, that would have been the test of it. Right here, we had bullish divergence. This is a 4-tick range, so you have your normal 4-tick range set up, your bullish cross, pullback test to the BBC with an up close. So an opportunity to go long there, but you could fade down to the BBC from up here. Okay. It's all the same stuff, guys, across all the 4-tick range charts. Okay. All the 4-tick range charts. This one, you would have been looking to probably short right here off of the yellow brick road. That didn't go anywhere. Then when it flipped up, you could have been looking to get long right in here. Okay, when it flipped in the opposite direction. It's usually a pretty significant move. You see it was going right into the weekly trading zone right here. This is all pre-market still. All that movement is pre-market still. It's going right into the zone right here, so you probably wouldn't have taken that, but you had your bullish cross over here. You tested the BBC with an up close. Now, if you guys are in here in the afternoon session, this session right here, for the first time, and you're hearing all this for the first time, and you haven't taken a free trial, I suggest go to cfrn.net/apply and take the free trial. All we ask for is your name and your email address. Okay, it's pretty straightforward. I do go through this a little slower in the live trading room. Actually, there's more markets, and I'm jumping all around, but it's all the same stuff. And I let you know when it's actually happening. Okay. All right. So that was the 6E. Now, I just glanced at the soybeans. On all these 4-tick arranged charts, guys, we're looking at the same exact thing. Okay? Over and over and over and over and over again. This one, it closed down over here. You're never going to close up above on the break right here. You got your down close. But you can see a couple more in here that were highlighted this morning. Okay. That's the soybeans. So now I've done these 5 markets. Let's just jump over here. We'll look at gold. Gold is another 4-tick range market, guys. You're looking at the same thing. You get your bullish cross, your bullish divergence. Here's your bullish divergence. Here's your test of the BBC with your up close. It's all the same thing over and over and over and over again. Okay. This was all during the break, and there's actually one happening right now on the short side. There was right there, and if you missed that, and there's one right there. This is the gold chart. I'll go over the ones that I took in the live trading room. I think I took 2. Yeah. All right. So we had a pullback up here and tested the BBC with the bearish divergence. I shorted it right in here, and I took profit right over here. A little bit of profit on that one. Over here, I sold the pullback up to the red YBR. Right here, I sold the pullback up there, and I took some profit down here. But again, you're looking at the same exact thing as we did on all the other charts, right? All the other 4-tick range charts. Okay. After you, is this the one that I shorted a little while ago? I showed you a minute ago. I also went long over here. The test of the blue part right here, right? The test of the YBR when it was blue. I went long in there, took some profit in there. Now you can see it just happens again and again and again. I actually lost this trade in here, so I had to make up 8 ticks because of that loss right there. And if you go back a little further, pre-market, there were some more trading opportunities right in here. All right. Right in there. Your bullish cross, test of the BBC, bullish divergence. Bearish cross, test of the BBC, bearish divergence with a down close. Right in the middle of all this chop right here, right at the open. Let's see. That's pretty much it. It's all the same though, guys. It's all the same stuff. All right. This was the one that just happened a second ago that I just pointed out, from 1768.3. It's dropped down to the prior swing low. It just exceeded the prior swing low at 767.6. So that is $70 a contract in the time that I've been going over the gold. Okay, so far. And If you get a down close on this bar, like that, I was just going to say if you get a down close on this bar, it'll probably keep going down. So it's just about $100 per contract in the time that I've been going over just the gold chart. All right. Let me bring up the Russell and we'll look at the Russell really quick. I highlighted a couple of things on the Russell this morning that had happened. Pull back up and test right here, test to the red on the YBR, test to the blue there, and just to test again right there. Had a bullish cross. Right here, you would have been looking to get long on the close of this bar right here, this one, right there. All right, the close of that bar, you would have been looking to get long. Again, tested the BBC with an up close with the bullish divergence. Another opportunity for a long. Tested the yellow line there, tested the yellow line there, and again right here. This one obviously didn't go anywhere. You had the bearish break of the elbow and also a bearish cross right here. A down close below this bar was right there, would have been a spot to short it. It didn't actually hit the YBR up here, all right, so you wouldn't have gotten entry on that. But you did get a bearish cross and pullback test of the BBC with a down close with bearish divergence right in here. So there were a couple of opportunities to enter into this huge move down right here on the Russell. Okay. Let me show you. Let me show you. Right here, we had a bearish cross test of the BBC with a down close with the bearish divergence again. So here on the Russell, oops, whoa, didn't mean to do that. Here on the Russell was the bearish divergence, and right in there was a spot to short it. Okay, you guys getting this? It's all pretty much the same thing. Here's crude oil, same thing, over and over and over again. Break of the elbow, up close, test of it right in here. This was all during the break. Okay, there was the break of it there, the close above the bar that broke it. Here was a test of the red right there. You could have sold the red there, sold the red here. But let's go back here. All right, you could have bought it here, the test of the blue, bought it again right in here, though we didn't have good divergence here or here. All right, the opportunities in here would have been momentum trades. You could have used a momentum trade right in here and gotten long right in there. All right, that's about the only way you could have grabbed that one. Yeah. Let's see, I highlighted some areas here on the way down. Bearish cross test of the BBC with a down close. Here's your bearish divergence right there. Okay, again right there, same thing. So you had a couple of opportunities to short the market right in there. Over here, bouncing off the YBR, pretty straightforward. Breaking it right here and then closing above it right there. Okay, right there. Testing it here and giving a down close. Again, this is one of those spots where you fade it down to the green line. You take the green line for the long, but it's just messy when it's like that. I'd much rather have it be like this, where you're taking your trade off the BBC when it's actually below. It's below the yellow brick road here. Okay. And again, we broke it here with a down close here, so you could have gotten short right in there. Where are we now? We're right at the open here. All right, this is the last market that I'm going to do. So I'll be done here. But you guys can see it's all the same stuff across all these markets, all the 4-tick range markets. You're looking for the same exact thing. All right. And it's same indicators, same setup, same everything. Same risk, as a matter of fact, on all the markets. All right, so that's it. I'm going to wrap up the recording here. Again, if you guys, I want to throw one more thing out there for you. If you've been on our trial in the past and price has been an issue, we now have a way for you to overcome that barrier. Price should never be an issue for you anymore. If you want more information about that, send us an email, support@cfrn.net. That's support@cfrn.net. Okay? And we'll be happy to give you all the information you need about that. Now, with the introduction of the yellow brick road in here, the YBR, and and everything else that we've been doing for years. You know, don't let price be an issue. There's no reason for that anymore. All right. With that, I am going to wrap up the recording. Again, support at CFRN.net. Thanks.